Hi, it's Adam Hewison. I'm back in the digital studios of Market Club, and today we're looking at the S&P 500. As many of you know, I took off for a vacation in New Zealand. I had a great time. It's good to be back, and to be honest with you, I'm kind of surprised that we had the S&P moving as high as it has done since I've been away. I think we stopped right around the 14th, which would be somewhere around this time window here. This is when I took off, and obviously this market moved up while I was away. However, we never had a technical signal to go short, so let's just put some of our triangles in here, and these are our trade triangles, which we talked about before, and these are our weekly. And as you can see, we had a signal here to go short because the trend was down, and we had a signal here to cover that position and basically be in a neutral position. Now all of our signals now are in a plus indication mode, so meaning the market should go higher. However, that's the technical side of the picture. Fundamentally, which is a totally different way to look at the market, this was all, I'm going to write this down, this is the Obama rally, or the Obama honeymoon. We have all these places, stress tests for the banks, everything else, and I don't know if anybody understands this, but I really don't see what has really changed, except we've just piled a huge amount of debt onto the American economy, which has to be paid for, and I don't think that's potentially a good thing. Now tonight, by the time you see this, we would have had the results of the so-called stress test. Now, here's an interesting sideline. If the banks were really in bad trouble, would the government really tell us that? I somehow doubt it. They would be concerned about a run on the banks, and they can't afford to have that happen. So the stress test is really kind of a little way of pussyfooting around this. But there's still a tremendous amount of toxic assets that have to be taken care of somewhere along the line, and that's not going to happen with the stress test. It's not going to happen in a week or two. So let's take this off the screen. We've got our technical indicator here saying to cover, this is a cover short, and I'm going to put the other one in our monthly, which just occurred here, and it looks as though that's still in place. Now the thing to look at right now is today's action. We've hit a new high for this rally, and we're starting to back off based on just market action itself. It's all about perception. All the news about the stress test in the banks have been leaked out. It's not new news. My guess is when the news does come out, we'll actually see a sell-off in the marketplace, but that remains to be seen. The first indicator is going to be the 3-day indicator, which means if the market goes below this low, we'll see further pressure on this market, and then we'll just have to watch the weeklies. But it looks to me, once again, that we've gotten ahead of ourselves, and for this to be a true market bottom, we're going to have to see some sort of pullback and retest. This is not going to be a V correction. It's going to be a test of this low. The other thing to look at is the MACD, the MACD indicator. If this rolls over, as you can see, it's not terribly robust. Even given this move up, it's still kind of flatlined, which is really quite surprising given the move up. So I think we want to look at this very carefully, because the first indication this market goes this way below here, then I think we'll see this test of this lows. Now take everything off the screen again. I'm going to put our Fibonacci tools in and draw them down here, and we could see potentially a move back down to the 800 level from where we are right now. So these are trading markets. They are not necessarily long-term position type markets, so you really want to be careful and keep your powder dry and take your profits when you have them. It's really that type of market. Anyway, I hope this video kind of updates you with my thinking. The trend technically is still looking good, and sometimes that's the important thing to look at, is the technicals. But again, we are in very crucial and difficult times for the economy, and I just want to scope this out a little bit further to show you this market has backed off from these levels. Again, if you just take this level right here and draw that around. So it would not be out of the realm of question to see a move like this, a move up, and a move back down. I could see that quite easily. So getting back to the 800 to 750 level like here could well be in the cards for this market. Hey, this is Adam Hewison. It's good to be back. I hope you enjoy this video, and thank you for watching.